Citigroup's fourth quarter results just out. Wilfred has the details. Wilf.
Yes, so thanks, Becky. The revenues come in at 18.3 billion. Their expectation was 17.9. The EPS adjusted is 190, comparable to 184. So a nice little beat on both lines. Let's jump to the fixed income trading, because it is trading that has led to this beat, much like with JP Morgan's, though not quite to the same magnitude. So we got an update early December at the Goldman Sachs conference. They said then trading overall would be high teens year over year. It's actually up 31%. And like JP Morgan's, that's focused in the fixed income area, where they're up 50% year over year. They reported a print of 2.9 billion. The expectation was 2.45 billion, so about half a billion beat, whereas for JP Morgan it was about a billion beat. Their equity trading was actually fractionally behind estimates, 500 million or so versus estimates of 600 million. So the takeaway here is that trading in December, late December, was much better than expected for both banks compared to their early December updates, and very much focused into fixed income area, not equities. That bodes better for Goldman Sachs, for example, compared to Morgan Stanley. As for the broader parts of the business, the consumer business grew in every single region, which is something they've been talking about a lot of late. For them, their net interest income coming in at 12 billion was a little ahead of expectations of about 11.7 billion. More for them because of better margin than volumes. The loan growth was about 2%. That was expected. But the margin, 2.63%, holding up much better than expected. The consensus was 2.55%. So a similar theme, but less of a magnitude of it to JP Morgan's results. Fixed income trading, the big reason for the beat, and the interest-sensitive parts of the business doing a little better than expected overall. If we look at the shares, they're up about 0.5%, perhaps because JP Morgan's was better still. They were up about 1% or 2%. That Wells Fargo number you guys were also just chatting about, I would point out that it looks like the big area for why the bottom line is so weak there is higher expenses than expected, 15 billion or so compared to 12.8 billion expectation. But we'll dig into those a bit later.